Hello students, how are you? We are going to discuss today the preparation of final accounts. A business starts writing account books, cash book, purchase book, sale book, journal and all other subsidiary books just for one purpose. The purpose is to know accurate amount of profit earned during the year. So when we have prepared the accounts, when we have made the journal entries, from the accounts we prepared the trial balance, and the trial balance tells us that the records which have been meant, they have been correctly maintained or there are some errors. We have discussed the errors which creep in and then how to rectify those errors. But trial balance is there to help us to find out whether the records are correct, and one thing more, it will also help us to find out our profit, whether the business has earned a profit at the end of the year or it has suffered a loss. The trial balance will help us. So my dear students, when you are asked to find out profit may be of two types, gross profit and net profit. The gross profit is found out of those, with the help of those expenses in the trial balance which are of direct nature. What are the direct expenses? Direct expenses are incurred in the production process of the manufacturing. For example, purchase of raw material or purchases, it is a direct expense. And it can be exactly measured. You may buy 5 kgs of raw material at the rate of 200 rupees per kg. So it is 10,000 rupees, not a paisa less, not a paisa more. So this is the direct expense. It is exactly measurable. So we call it direct expenses. It can be related to the production as it is. If a worker charges 500 rupees to make a table, these are the wages, not a paisa less, not a paisa more. Entire 500 will become a part of the cost of the table. So these are direct expenses. If there are 5 nails used in the making of a table, the cost of these 5 nails, 5 rupees, is a direct expense because it is exactly measurable and it is a part of the production. So this is how to find out which are direct expenses. Power used in the process of manufacturing, in running the machines, and in lighting the factory premises. All these expenses are direct expenses and will help us in finding out our gross profit. So all these direct expenses put together will be compared with our revenue. What is revenue? Our net sale. I said net sale. What do you mean by net sale? Net sale is sales, gross sales, say 1,50,000 less returns. Sales returns, goods were not up to the mark, 2,000 worth of goods returns. We will call this 1,48,000. This is our net sale. This is net sales, right? So similarly, we have net purchases also. Purchases is a direct expense. So we have purchases say for 5 lakhs, and there are goods returned that will be deducted out of this, less returns, say 5,000. So 4,95,000 is the net purchases. These are net purchases. So this is our cost. This is our revenue. It may be 1 lakh. It may be 9 lakh. It may be 19 lakhs. Similarly, this can all be worked out as net sales. So these net sales will be compared with our direct expenses, and this is one of the direct expenses. Okay, so when we compare direct expenses with our sale and find out the difference, what do we get? We get gross profit. Is that okay? So when you study a trial balance, it has two sides. One is debit side, other is credit side. On debit side, there are two types of accounts. One are nominal accounts. Nominal accounts are expenses accounts, right? The others are either personal accounts or real accounts. So the debit side of the trial balance has got three types of accounts, not two as I earlier said. It has three types of accounts: nominal accounts, personal accounts, and real accounts. Now, nominal accounts are all expenses. These expenses may be direct expenses, they can be indirect expenses. Okay. Now, direct expenses, I have told you, what are the direct expenses? I'll give you a list also in a short while. Then we have indirect expenses. Indirect expenses are such expenses which cannot be entirely charged to a product. Now, in a factory, there is a light. Without light, no product can be made. No production can take place. Okay? Now, when this light is in the factory, so it is all direct expense. Supposing this light is there in the office. Now, in the office, there are large number of people working. Some people are operating the computers, some people are operating some other electrical gadgets. Okay. Some people are operating some typewriter, they are typing some letters. Now, what is the cost of electricity or lighting or power to operate the computer? You cannot measure this. What is the cost of lighting in an office for one product? Yes, if the letter is not written, you can't get an order. In order to get orders, you have to write letters to the suppliers and to the manufacturers, to the other people. You have to place an order. So letter has to be typed. But the lighting is not there only for letter writing. It is there for other purposes also. Lighting is there or power is there to run the fans in or AC in the office. So all these expenses ultimately result in production of the final product. The final product, in the production of the final product, there are expenses incurred in the factory, they are direct expenses. There are expenses incurred in the office, for example, writing letters to get the orders, okay? Writing letters to the suppliers, writing letters for advertising. All these things are done and some expenses are incurred. These expenses are indirect expenses which are incurred in the office. So they cannot be wholly correlated or charged to one product. But some part of them is definitely an expense, but we cannot clearly indicate that out of 5,000 rupees indirect expenses incurred on paying salaries to the office clerical staff, how much of this expense relates to the products produced in the factory? Cannot be measured. Therefore, these are indirect expenses. Okay? So, therefore, coming back to trial balance, in trial balance, I told you, here is a trial balance I have written. This is the trial balance. It has got a debit side and a credit side. There are around these items here, around 14 items here. They are three types. These items are three types. These accounts are of three types. One are personal accounts, the other are their personal accounts and real accounts, and then expenses and incomes. Expenses accounts, debit side. On debit side, we have these three. On credit side, we have only two. One are personal, the other are expenses is on the debit side and incomes will be on the credit side. These are also called nominal accounts. These are also called nominal accounts. Expenses and incomes. Incomes on the credit side. There are no real accounts on the credit side, mind you. On the debit side, we have three. Okay, come here. Purchases. This is a nominal account. Sales return, a nominal. Furniture, real. Machine, real. Stock in hand. Stock in hand in here, it is for use in production. We will take it as nominal. And this is nominal. This is nominal. This is debtor. These are personal. This is personal. This is real. Carriage inward, nominal. Office expenses, nominal. Trade expenses, nominal. Nominal and nominal. Look here. We have persons, we have real, and all others nominal. Okay? On this side, we have only persons. Creditors are persons. Bills payables are persons. Loans are persons. Capital is person. Creditors and then. This is nominal, sale. Return outward, nominal. And this. So this is how when you have a trial balance before you, read it and then watch the debit side and the credit side and tick the nominal accounts first on both sides. Nominal accounts will help you to find out your profit. Real and personal accounts go to the balance sheet. Nominal accounts will help you to find out the profit. Okay? And profit, as I told you, is of two types, gross profit and net profit. Gross profit is calculated by comparing direct expenses with the sale. You get gross profit by deducting direct expenses from the net sale. Got it? Deducting direct expenses from the net sale. You get gross profit. Understand? Now, when we go to the find out net profit, we will deduct all indirect expenses from gross profit. ग्रॉस प्रॉफिट में से पहले से ही ग्रॉस प्रॉफिट निकाला है, सेल में से पहले ही इनडायरेक्ट एक्सपेंसेस कम हो चुके हैं. सो नाउ वी विल डिडक्ट द indirect expenses from gross profit and we will get the net profit. So here is trial balance. Here are nominal accounts. These nominal accounts, which one are the direct? This is direct. Sale return, this will be deducted out of the sales. This is also nominal. This will be deducted out of the sale to get the net sale. Stock in, this is also direct. Salary is indirect. Bad debts is indirect. Cash debts is real. Carriage inward is direct. Now carriage inward is purchase, paid on purchases. When you go to the market to make the purchases, you have to bring the purchases to your factory. You will have to pay carriage. This is called carriage on the goods brought in. So carriage inward. And what is carriage outward? Carriage outward is provided to send the goods to the place of the buyer. So that is carriage outward. So it is not a direct expense, it is an indirect expense. Therefore, that will not come here. So office is indirect, trade indirect, wages is direct, and carriage outward is indirect. So I have 1, 2, 3, 4, 5. 5 direct expenses. On this side I have this sale. Okay? And here I have returns outward. These returns outward will be deducted out of the purchases to find out the net. And this commission is an indirect income. This is indirect income, nominal, but this is indirect. This is nominal account, but this is indirect. And indirect income. This is nominal and will not come in calculation of gross profit. Now, how to calculate our gross profit and net profit? For this purpose, we have to prepare trading account and profit and loss account. We will prepare trading account. We will write here trading account for the year ended March 31, 2014. This is my trading account. Okay? I will prepare the trading account like this. And in this trading account, we have two sides, a debit side and a credit side. Of course, this is rupees, write rupees, and I have to write direct expenses here. For example, I write here to opening stock. To opening stock. Here is this. Opening stock, this is opening stock which is given in the trial balance. This is how much? 6,000. To this I'll add purchases. This was the stock left. Purchases less returns. How much are purchases? Purchases are 25,000 and returns are 1,500. I write here purchases 25,000 less 1,500. So it will be 23,500 here. Purchases 25,000 less returns. This is my net purchase. So I have written opening stock and purchases. I tick this. I have purchases, लिख लिया. This will be deducted from the other side. I have a stock in hand, this is done. Then I have carriage inward. I write here carriage inward. Carriage inward, 2,000. Then I have wages, 15,000. Wages are incurred in factories. So it is a direct expenses. Wages are 15,000. So I've written wages, I've written carriage inward, I've written stock in hand, I've written purchases, less purchases returns. These are my direct expenses. These are my direct expenses. Now on this side, I